Before you trade penny stocks, you need to understand something first. The definition you have in your head right now, it's probably completely wrong. Most people think penny stocks are just cheap stocks, like 1 or 2 cent stocks. But that oversimplification is what causes beginners to chase the wrong setups, misunderstand risk, and blow up early. Because penny stocks aren't about price. They're about structure, volatility, and how they actually trade and follow patterns. So in this video, we're going to clear that up once and for all so you actually know what you're looking at when you run the scans in the market. So let's take a look at a penny stock from today and how this stock played out. OMEX is kind of the penny stock du jour, as we like to say. And I want to go over all of the patterns that this stock had followed. So you can see, jumping back to the bigger picture chart, long-term downtrending stock. From October to today, it had fell from $4 all the way down to less than $1 a share. Non-stop fade. Now, all of that changed today when they released some news. They basically pumped their stock, as we like to say. So you can see that they released some information this morning, and this might get a little advanced for some of you guys, but I'll come back to it. But they were announcing a merger in $1 billion deal. Now, this is a low float stock, was trading ridiculous volume, and a couple magic things really happened with OMEX. So when that news dropped, you can see this big spike from about 85 cents to about $1.14. So that would have put it on all of our scanners, all the scanners that I'm going to show you later in the videos. But I want to explain to you why we trade penny stocks and why we love this volatility. Now, this stock gapped up huge and then completely went back to right where it was, right where it came from, which allowed us to set up and be ready for that pattern. Now, where the buy was when this stock broke through that initial spike from in pre-market. Now, again, I'm not trying to get too advanced in this video. We will talk about a lot of this later, but that retest of the high of the day, which also closely aligned with the cross of $1, was an absolute beautiful entry. So we have an algo that actually tracks these exact setups called the Rubicon Codex. It alerted this stock as a buy at $1 a share, and notice where it went. Almost immediately went to $1.82, almost straight up. That's an 82% move from a $1 entry. Now, if you would have held even longer, in pre-market, it went to $2.29. That's 129% potential gain from that retest, from that pre-market pattern that we love to trade. What's great about these, a lot of you guys might be East Coast time, Central time. You can literally trade this stock before you even leave for work. And maybe you don't sell the top 20, 30, 40, 50, 60, 70, 80, 90, 100% plus of potential. That's why we care. Now, the reason I use this as an example is why it's so important to understand what penny stocks are. They are patterns, okay? We don't believe in these companies. It's just ticker symbols, literally letters that represent a pattern. Now, the reason I specifically chose OMEX for this example is look at where it is now. Now, it's still above the initial entry, but look at how it is sold off through the day. Drop me a comment. How many of you have bought these stocks, not known the patterns, didn't know risk management, didn't know to take profits for 20, 30, 40, 50, 70, 80%, and then you turn these big winners into losers or break-even trades? That's what penny stocks are. This is a perfect example of what we trade. Now, we enter them with a plan and risk management and patterns so that we can capitalize and collect the maximum amount of gains. But here's the thing. By the time you watch this video, actually do this, pause the video, type in OMEX to your charting platform. I guarantee this stock will be all the way back where it came from. That's where penny stocks get a bad name. But you're never going to trade an NVIDIA or an Apple and have the opportunity to make 100% plus in one day. Now, that being said, let's jump back and talk about the SEC definition versus the trader definition, okay? So the SEC kind of considers any stock under $5 a penny stock. You'll hear that term. Now, what's funny is the financial media, pretty much anything in the single digits, and this is why it confuses a lot of people. Like anything that's under $10, CNBC, they'll all call it penny stocks. Now, for us as traders, we typically say penny stock, that's a stock under $1 because it's trading for pennies. But from a trader perspective, we consider penny stocks that move like OMEX. It could be a $2 stock, it could be a $20 stock, it could be a $200 stock. I have videos on the YouTube where I talk about around earnings. Sometimes these big name, high price stocks trade like penny stock. The penny stock name is attached to the volatility. So it's more about the movement and the potential than it actually is the price of the stock. Now there's many tiers, as I mentioned. There's sub penny stocks. A lot of you might know this. There's stocks that trade for less than a penny. I've seen stocks that trade for 1/1000th of a penny. We typically avoid those these days. We're looking for, again, those 50 cent and above stocks. But we got the sub pennies. We got the true pennies, which is less than $1. Low float stocks. This is the key. I don't care what the price of the stock is. If the float is less than 15 million shares, that creates opportunity. Now, again, that might be an advanced term for some of you guys. We'll talk about float ton in the series. Make sure you're going through every video in the series because they're all tied together. And then low floats are the ones we love. Then we've got low price listed stocks as well. When I say listed stocks, that's a stock that's on the NYSE or the NASDAQ, which is 99% of the stocks we trade. OTCs, you might have heard OTC stocks. FYI, guys, especially if you're watching maybe some older trading videos. A decade ago, 20 years ago, OTC markets used to be hot. They have been deader than dead. Avoid OTC stocks like the plague. There's no liquidity. There's no movement. So many people fall in love with the dream of OTC stocks from 10 years ago. They're dead. Avoid them at all costs. Now, why does this matter for beginners? It's why I personally focus on listed low price stocks and avoid the dark corners of OTC. We want listed stocks, particularly NASDAQs, low float, small market cap, and the share structure that we look for. That means the less shares available, the higher the demand, the more the explosive potential, or what we call float rotation. So that being said, we see these plays almost every single week. OMEX that I went over earlier is not unique. Yesterday, literally the day before, we had AIXI, exact same pattern. Gapped up big, had news, pulled back in retested $1 and went to over $2 plus. So what I want you to do is focus on the patterns and the setup and the structure versus the actual letters. These are trades, not an investment. Approach it that way. So now you know what a penny stock actually is. In the next video, we're going to talk about the part that nobody wants to talk about, the reality of day trading, the wins, the losses, the statistics, and what your honest expectation should be. So don't skip this next video because this is the video that decides whether you make it or you give up in 90 days.